Bank Negara Malaysia has brushed off the US Treasury's move to put Malaysia on its currency manipulator watchlist. The central bank says Malaysia supports free and fair trade and does not practice unfair currency practices. It adds that the inclusion holds no consequences for Malaysia's resilient economy. The US Treasury flagged Malaysia, Singapore, China, South Korea and Japan as the Asian trading partners which merit close attention to their currency practices and macroeconomic policies. In its foreign exchange policy report, it noted that while Malaysia has maintained a significant bilateral trade surplus with the US since 2015, its current account surplus has narrowed substantially. It added that BNM has intervened in both directions in foreign exchange markets over the last few years. According to its estimates, in 2018, the central bank made net sales of foreign exchange of 3.1% of GDP to resist depreciation of the ringgit. In response, Bank Negara explains that it only intervenes to avoid excessive volatility of the exchange rate. It points out that the ringgit exchange rate is market-determined and is not relied upon for exports competitiveness. Former PM Datuk Sri Naja Ramli was said to be shocked and very upset upon discovering 42 million ringgit in his personal bank accounts. Witness Datuk Dr. Syamsul Anwar Sulaiman, the MD of Ehsan Perdana, which was in charge of 1MDB's CSR programs, took the stand today. He told the KL High Court that he had to apologise to Najib after the then PM expressed shock upon learning that money was transferred into his private accounts from SRC International. According to Syamsul, Najib did not even know who was behind the money transfer and why it was done through Ehsan Perdana. That said, Syamsul testified that Najib did not instruct him to lodge a police or MACC report over the matter. CIMB Group saw its first quarter net profit shrink 9% year-on-year to 1.19 billion ringgit on the back of lower operating income and higher expenses. Revenue also slipped, down 3.2% to 4.17 billion ringgit. No dividend was declared. The nation's second largest lender by assets says operating income fell due to a decline in fee income and the absence of a 152 million ringgit gain from the sale of CIMB Securities International in the first quarter of FY18. CIMB Group CEO Tengku Datuk Sri Zafrul Aziz points out that although earnings did decline compared with the previous corresponding period, its quarter-on-quarter performance improved amid a challenging operating landscape in its key markets. As for the rest of the year, he says the group expects times to remain challenging amid fresh trade tensions and other macroeconomic headwinds, coupled with tougher operating conditions in its major markets. However, he is confident that its growth plan Forward 23 will accelerate growth and future-proof CIMB. A plan by MAA Group's controlling shareholder to take it private has fallen through. Tunku Datuk Yaakob Khaira, who via the Malewa Group controls 38.67% of MAA, had proposed that the company undertake a selective capital repayment and repayment at RM1.10 per share. It was meant to pave the way for Yaakob to take the group private. However, MAA's minority shareholders rejected it, and Yaakob says he will not be revising the offer. He says the next course of action is to negotiate with regulators to allow the PN17 firm to embark on multiple acquisitions of smaller-sized businesses. MAA's shares tanked on the news, closing 20% lower at 79.5 cents. FGV Holdings is hoping to sell True Rich Resources, its 50-50 JV company with Lembaga Tabung Haji, by September this year. CEO Datuk Haris Fadzila Hassan says the group is in negotiations with 7 prospective buyers. True Rich is valued at a bit more than 1 billion ringgit. Separately, FGV announced a first quarter net loss of 3.37 million ringgit versus a net profit of 1.13 million ringgit a year earlier, due mainly to a sharp fall in CPO prices. Revenue dipped 9% to 3.28 billion ringgit.